Do you think that high-limit credit card in your wallet is an emergency fund? It's not a safety net. It's a financial trap. A single unexpected bill can kickstart that spiral that takes years to escape. Today, I am showing you why using a credit card for an emergency is so risky and what you should do instead to build real financial security. Using a card feels responsible in a crisis, but it's an illusion of security. Recent reports show just how widespread this is. About a third of Americans have more credit card debt than emergency savings, and a quarter of people say their plan for a 1000 emergency is to charge it and pay it off over time, total as credit. Card debt is staggering, sitting at over $1.18 trillion. So why is this a trap? First, the crippling interest. The average interest rate on cards carrying a balance is over 21%. When you charge a $3,000 emergency, minimum payments barely touch the original amount. Most of your money just feeds the interest, trapping you in a cycle where the balance never seems to drop. Second, you damage your credit score. Charging a large amount spikes your credit utilization ratio, the amount of credit you're using. Lenders see high utilization as a risk, which can cause your score to drop immediately. A lower score means higher interest rates on future car loans or mortgages, costing you thousands more. Finally, there's the constant stress. Debt controls your money, dictates your choices, and prevents you from ever getting ahead. It turns a one-time crisis into a long-term financial illness. The real solution is a dedicated emergency fund. This is your way out. Step 1. The goal: a dedicated fund. Your emergency fund is cash you own, ready to go. The goal is to save 3 to 6 months of essential living expenses, just the bare bones cost of housing, food, and utilities. Keep this money in a separate high yield savings account. It's safe, easily accessible, and earns more interest than a traditional account, helping your money keep up with inflation. Step 2. How to build it. Don't get overwhelmed by the big number. Step 3. The right way to use a credit card. This doesn't mean credit cards are bad. Use them as a payment tool, not a loan. In an emergency, pay with the card to get purchase protection or rewards. Then, as soon as the charge posts, log into your bank and pay the credit card bill in full using money from your emergency fund. You get all the benefits of the card with none of the debt. Conclusion and final CTA: that credit card safety net is really a high interest loan that can cost you your financial peace of mind. Building a real emergency fund gives you something far more valuable: genuine control over your life. If this helped you, subscribe for more content that puts you in control. See you next time.